Welcome to Earnings Recap. Today we're covering AMD's earnings report and call.
That's right.
You know what really stood out to me? AMD mentioned their latest Ryzen processors are basically the top choice for gamers now, heading bestseller lists all over the world.
Yeah, that's a pretty big claim, and seems like they have the numbers to back it up in some areas.
Definitely significant. So in this deep dive, we're going to break down AMD's latest earnings report. We'll try to make sense of the key numbers and, what they really mean for the company. Plain English, no heavy jargon.
Sounds good. And right off the bat, it's clear AMD's got some serious momentum. Their first quarter revenue for 2025, $7.4 billion. That's up a hefty 36% from last year.
36%, wow.
Yeah, and what's really telling is this is the fourth quarter in a row where that year-over-year growth has actually picked up speed. So it suggests a really strong underlying trend, not just a one-off good quarter.
That's a big jump indeed. Does that mean they're actually making more profit too? Is it hitting the bottom line?
Absolutely. Their non-GAAP earnings per share, the adjusted figure analysts often look at, came in at $0.96. That's a jump of 55% compared to last year.
55%?
And importantly, it beat what the analysts were expecting. We also saw their gross profit margin improve again, fifth quarter straight, hitting 54% on that non-GAAP basis. That's up from 52%.
Okay, so they're selling more and making more on each sale, or selling higher-end stuff.
Kind of both, it seems. It indicates better efficiency, or like you said, a richer mix of higher value products. And yeah, their adjusted net income also climbed 55% year over year. So the bottom line is definitely looking healthier.
Okay, so what's the engine behind all this? What's really driving it?
Well, the report points to two main things. First, booming sales in their data center business. And second, that more profitable mix of Ryzen processors we just mentioned. Stepping back a bit, AMD's highlighting their strong product lineup, good execution on their plans, and just real momentum in data centers. And of course, AI. Those are definitely their key strengths right now.
Right, the data center. That seems to be the real powerhouse here.
It absolutely is. Revenue there shot up 57% compared to last year, hitting $3.7 billion.
57?
Yeah. And it's being driven by strong sales of both their EPYC server CPUs and their Instinct GPUs. Those are the ones for AI workloads. What's really key is they keep gaining server CPU market share.
How are they managing that?
It seems to be the continued demand for their current 4th-gen EPYC chips, plus the successful launch and ramp-up of their brand-new 5th-gen ones, codenamed Turin. It suggests their tech is really hitting the mark for server customers.
And the big cloud companies, the hyperscalers, they're jumping on board.
Oh, definitely. Big names like Alibaba, AWS, Google, Oracle, Tencent. They launched over 30 new cloud services using EPYC in just the first quarter.
30 new ones.
Yep, and that includes the first waves using those new 5th-gen Turin chips. And interestingly, AWS launched some specialized instances combining EPYC with Autolink's FPGAs.
FPGAs. Those are the programmable chips, right? What are they using those for?
Exactly. They're targeting really demanding stuff like genomics research, heavy multimedia processing, network security, even high-end video broadcasting in the cloud. Think about the raw power needed for that.
Yeah, that sounds intense. Okay, so that's the cloud giants. What about regular businesses? Are they adopting this too?
They are, increasingly. The number of Forbes 2000 companies using EPYC-powered cloud instances actually more than doubled compared to last year.
Doubled?
Yeah. New wins in streaming, transportation, finance, social media. For instance, CrowdStrike, the cybersecurity firm, they reported getting much better performance and saving money by switching to EPYC in the cloud. So real-world benefits.
It sounds like partnerships are key here, too.
Very much so. Siemens, for example, launched a new vehicle design software solution that uses EPYC and AMD's Radeon Pro GPUs on Microsoft Azure. Speeds up car design.
Okay.
And Oracle updated their big Exadata database system, optimized it for 5th-gen EPYC, and they're claiming up to 25% faster performance.
That's a significant boost for database work.
It is. And even for companies running their own data centers, on-premise EPYC sales grew for the 7th quarter in a row. Public sector, big deployments in auto, finance, energy. EPYC is really becoming a go-to choice. We should see over 150 new server designs using Turin soon.
So broad support. What about the roadmap? Where are they going next with servers?
Well, a big step was starting to manufacture those 5th-gen EPYC chips at TSMC's new fab in Arizona back in April. First shipments should land in the second half of this year.
Made in the USA, interesting.
And looking further out, their next generation, codenamed Venice, is set to be the lead product for TSMC's cutting-edge 2-nanometer process. That's targeting a 2026 launch. so they're constantly pushing performance.
Okay, EPYC sounds solid. Let's talk AI in the data center. That's the other big growth area, right?
Huge, yeah. Their data center AI revenue jumped significantly year over year as they shipped more of their MI325X GPUs. They now have over 35 different server platforms out there using their MI300 series GPUs.
And who's buying these?
The big cloud providers are definitely using these Instinct accelerators more and more for generative AI things like powering search results, ranking content, making recommendations. Plus, they snagged new big customers, both cloud and enterprise, including a major AI model developer using Instinct for inference.
Inference that's running the trained AI model, right? Not just training it.
Exactly.
Yeah.
And demand is growing for both training and inference. AMD keeps highlighting their memory capacity on these Instinct GPUs, saying it's industry-leading, which is critical for these huge AI models.
Makes sense.
They're also seeing more training engagements ramp up, customers building bigger Instinct GPU clusters. And it's not just U.S. tech giants. They mentioned progress in sovereign AI, like a partnership with G42 in France to build AI infrastructure locally.
Sovereign AI. Okay. And the software side. That's always crucial for AI hardware.
Absolute vital. They've sped up releases for their ROCm software platform updates now every 2 weeks, packed with optimization.
Every 2 weeks. That's fast.
It is. And they're pushing open source engagement. Apparently over 2 million models on Hugging Face now just run on AMD hardware out of the box. They're also offering day zero support for key new models like Meta's Llama 4, Google's Gemma 3.
So keeping pace with the rapidly evolving AI model landscape.
Right. And they claim their ROCm optimizations gave them leadership performance for running the DeepSeek R1 model shortly after it came out. The latest ROCm 6.4 has major upgrades for training and inference, plus better tools for managing big clusters.
And that ZT Systems acquisition, how does that fit in?
Yes, that seems very strategic.
Yes.
ZT brings expertise in designing and building complete AI systems right down to the rack level.
So not just chips, but the whole setup.
Exactly. That's huge for cloud customers because it can slash the time it takes to get AI infrastructure deployed and running, faster time to market. There's also interest in ZT's manufacturing side, and AMD hinted at a partnership announcement there soon. Seems like a key piece for offering more complete solutions.
Makes sense. So what's next for their AI hardware?
They started sampling their next-gen MI350 series GPUs in Q1. They're aiming for production mid-year, maybe even accelerated. They're expecting a big performance leap from the new architecture CDNA 4.
More memory, more bandwidth.
Yeah, like 1.5 times the memory capacity and bandwidth, new data type support, and potentially much, much higher throughput compared to the MI300X. They say customer interest is really strong.
Okay.
Plus, that big Oracle deal we mentioned, that's a multi-billion-dollar plan to build a huge cluster using MI355X GPUs, 5th gen EPYC, and even AMD's own AI networking tech.
Wow, multi-billion.
And then there's the MI400 series planned for next year. That's designed for top-tier inference and training, scaling from single servers up to whole data centers. Early feedback is positive, and they think it'll expand their market reach. We'll probably get more details at their AI event in June.
All right, lots happening in AI and data center. Let's shift gears. What about their traditional PC and gaming segments? How did they do?
That combined segment also saw solid growth revenue up 28% year over year to $2.9 billion. The client or PC part really stood out, jumping 68%.
68%. That's huge for PCs.
It is. It marks their 5th straight quarter gaining share there, and they hit a record high for the average selling price of their PC CPUs.
Meaning people are buying the more expensive Ryzen chips.
Exactly. Strong demand for their high-end desktop and laptop processors. So selling more chips, and more profitable ones too.
And those Ryzen processors seem to be heading home with consumers, especially gamers.
Very much so, based on their commentary. Desktop channel sales were up over 50% year over year. New records in several places. They specifically called out Ryzen as the top choice for gamers. They even added a new 16-core high-end chip.
Okay. Laptops.
Mobile side was strong too. Especially demand for the latest AI PC processor sales there were up over 50% just from the previous quarter. Laptops with their new Ryzen AI chips are getting good reviews for performance, AI stuff, and battery life.
What about business PCs? Commercial side.
Also looking good. Ryzen Pro sales grew over 30% year over year. They're winning new customers, and the big PC makers have significantly increased the number of AMD-powered commercial systems they offer. Wins in auto, energy, healthcare. AMD sounds pretty confident they'll keep growing client revenue way faster than the overall market this year.
But gaming revenue specifically was down, right?
Yeah.
despite the good Radeon sales?
Correct. Gaming segment revenue fell 30% year over year. The main reason was lower sales of their semi-custom chips.
Console chips.
Exactly, for PlayStation and Xbox. That was partially offset by higher Radeon graphics card sales for PCs. The good news for consoles, though, is they said inventory levels are back to normal, and demand signals for 2025 look stronger.
And the Radeon cards themselves.
Their new Radeon 9070 series apparently had a massive launch record first-week sales, like 10 times higher than their previous best. They're actually scrambling to restock.
Sounds like a nice problem to have.
Indeed. And they also launched FSR4, their new AI-based graphics tech, to boost frame rates. It's in over 30 games already, aiming for 75 by year-end. That kind of tech can definitely sway gamers.
Okay, one more segment. Embedded, how's that doing?
That one saw a small dip, down 3% year-over-year. Revenue was $823 million. But AMD expects things to pick up. They see a gradual recovery and a return to growth in the second half of 2025.
What makes them think that?
Improving demand in areas like test and measurement gear, communications equipment, and aerospace. They've also started shipping some new embedded products, cost-optimized FPGAs, new AI chips for edge devices.
Edge devices, like factory robots or smart cameras.
Sort of, yeah. Things outside the traditional data center.
Yeah.
They also launched embedded versions of their EPYC server CPUs. Cisco's already using them in high-end firewalls, and IBM's using them in new storage systems. Practical stuff. And they updated their Vitis AI software to help developers deploy AI on these embedded chips.
All right, so let's look forward. What are they predicting for the next quarter, Q2?
Okay, so for Q2 2025, they're forecasting revenue around $7.4 billion, give or take $300 million. But there's a big asterisk here.
Oh, what's that?
That number includes an estimated hit of $700 million because of new U.S. export license rules affecting their MI308 GPUs going to China.
$700 million just in one quarter. That's substantial.
It really is. But even with that headwind, the midpoint of their forecast still means 27% growth compared to Q2 last year. So the underlying business seems strong. For the full year, they think the total hit from these export controls will be about $1.5 billion.
Okay, so a significant impact, but still growing year over year. How does that break down by segment for Q2?
Sequentially compared to Q1, they expect client, PC, and gaming revenue to be up double digits. Embedded should be roughly flat. And data center revenue is expected to decrease, mainly because of pulling out those China MI308 sales.
Got it. And profit margins.
Their adjusted gross margin forecast for Q2 is about 43%. But again, there's a catch. That includes a massive charge, around $800 million, for inventory write-downs and reserves related specifically to those export controls.
So the underlying margin is better.
Much better. If you pull out that charge, the underlying gross margin would be closer to 54%, which is strong. Operating expenses are expected to be around $2.3 billion, partly bumped up by the ZT Systems acquisition.
So despite those export challenges, the core business trajectory still looks pretty positive.
That seems to be the message, yeah. Their strategic focus hasn't really changed. They're still investing heavily in R&D, their product roadmap, sales efforts, and building out their AI software stack and complete data center solutions. They keep stressing execution.
Right.
And interestingly, they're framing this environment, even with the headwinds, as a strategic opportunity to differentiate themselves with their tech leadership in computing and AI across all their markets. Shows a certain confidence.
What else came out during the Q&A with analysts? Any interesting nuggets there?
Yeah, quite a few. Analysts dug into that strong client performance, and AMD confirmed it wasn't just tariff weirdness, it was strong desktop sales and higher prices, real demand. The commercial PC recovery is also just getting started.
Okay. What about the AI ramp?
The Instinct GPU ramp in Q1 was apparently right on track. They sound really excited about the MI350 launching mid-year, saying customer interest is high, and it should slot into similar server designs as the MI300, which helps speed things up. That Oracle partnership got mentioned again as a big deal. They expect AI business growth to really accelerate in the second half.
And the China export impact timing.
Most of that data center GPU hit is expected in Q3, the September quarter. Q4 was apparently already planned to focus more on MI350 revenue outside of China anyway.
What about inventory? They mentioned building some up.
Right. They said that's deliberate building inventory to support the strong client and server ramps, plus the big H2 data center GPU push, which has long lead times for manufacturing.
And the ZT acquisition rationale.
They see it as absolutely critical for tackling rack scale designs, especially for the future MI400. They're working closely with the ZT team and customers already. Lots of enthusiasm for MI400, apparently. They acknowledge learning from some recent deployment challenges in the industry.
Makes sense. Any insights on EPYC's enterprise growth?
Yeah, they put it down to the strong product, 5th-gen Turin, plus a wider portfolio now, and big investments in their sales force, focusing directly on end customers and replicating successful uses across industries.
Oh, yeah.
They still feel it's early days for penetrating the enterprise market fully.
So strong growth expected overall in data center.
They reiterated expectations for strong double-digit growth for the whole data center business and the GPU business year over year. MI325 and MI300 made up most of the data center GPU revenue in Q1.
Did they comment on the overall AI market size estimate, given the China situation?
They mentioned their big AI accelerator market forecast, around $500 billion, already baked in some China limitations. Yeah. But they're actively talking with the U.S. government about the rules, stressing how important it is for the U.S. tech ecosystem to be adopted globally.
Interesting dynamic. Anything else stand out?
Confidence in the embedded segment bouncing back in the second half based on order patterns. Acknowledge the OpEx increase includes ZT, but stress discipline. They feel they have all the pieces, CPU, GPU, networking, rack scale for system-level solutions, focusing on interoperability. And they noted the rise in AI inference costs and a shift to distributed inference, which plays to their strengths like memory bandwidth. They see roles for both GPUs and custom AI chips, emphasizing flexibility as models evolve.
Okay, so wrapping it all up.
Yeah.
How would you summarize AMD's quarter and outlook?
Well, I think AMD definitely had a strong start to 2025. They're navigating a pretty tricky environment, but still posting robust growth, especially in those key data center and client areas.
Yeah, the growth numbers are impressive, even with the headwinds.
Right. And that ZT Systems acquisition looks really important strategically. Add that to their continued progress on the AI and CPU roadmaps, and it positions them pretty well for future growth, despite things like those export controls.
So the focus seems to be on innovation, customer partnerships, expanding their reach.
Exactly. It paints a picture of a company really focused on the long game, on creating long-term value, even when dealing with short-term challenges.
Okay, solid quarter overall then. And here's a final thought for you to mull over. As this whole AI infrastructure build-out continues, how do you think that balance between general-purpose GPUs like AMD and NVIDIA make, and those custom-designed AI chips we're starting to see more of? How will that balance shift, and what does that mean for companies like AMD, and maybe more importantly, for the choices their customers will have to make down the road?